Good morning, crypto family, and welcome back to another episode on the Coin King channel. I'm your host, down to Crypto TA. I honestly cannot tell you what we sound like this morning, as I'm not at home, I'm on vacation. And so things are, I don't have my normal setup that I would have. Let me see if I can't put something here. Let me see. I can't hear anything myself right now. All right. So I hope the sound is not too bad for you guys. I really do. I'm not gonna stay that long. I'm just gonna take a look and see what we have happening right now with the biddy. I know that we're on a little bit of support. We're slightly above the golden pocket. If I take a look here at the 4-hour time frame here. All right. So we're holding on here to our 28 moving average here. Um, and these are our RSI ribbons here. So we're just holding on to that. The measured move here for this rising wedge that was in play is down here towards the golden pocket. So it does suggest a little bit lower. We're front running it at the moment simply because we are holding on to a little bit of support here. If I take a look, let's see. Oh, hold on. Never mind. I don't actually have to take a look. We're actually going below. We're going negative on MACD at the moment. I can see that that's happening. And all the little dots you're going to see on my chart right now, this is an indicator that I've used before. It's called the ultimate noise filter. So UNF, and it's not filtering out noise. It's actually creating a lot of noise on the chart, and I can see that. So you can see right here where you see those gray bars are at. So that's just letting me know, okay, so you have a disagreement right now, and borderline we could see a continuation on the 4-hour time frame to the downside if we don't flip back up. So I'm just going to give that time. Maybe, like I said, maybe just here into the golden pocket, something like that, or maybe we back test this trend line right here. um, Everything still looks good. I mean, I know we had this rising wedge in here. Market makers continue to squeeze out shorts. Everybody who was shorting in here, which I did too. I made several attempts at the short in here. I took profit. I secured profits on each one of the short attempts that I took in here, and I'm in a short again right now, as of this situation right here happening. So I've already TP'd on it. So if it continues to go down, then I'll continue to make profits off of it. If it doesn't, then I'll walk away with what I managed to scrape out of the market on this move down. But daily time frame still looks fine. The only thing over here with the daily, we are back below our value area high, and we do still have a situation where we can come down here. So you remember I was talking to you and I was saying, like, we got that fast signal on the daily time frame, but we kept squeezing higher and higher and higher. And we also talked about the fact that price will probably push up into this this channel, the top line of our channel, and also the 786. So we've done all of those things right there. All of that has played out so far. And that would have been your get short moment also. Every opportunity that was given in here was a good opportunity. So um don't feel any kind of way about that. If you were somebody who kept trying to take the short, because you were not alone, several people, including myself, continued to make the attempt at the short, and um, yeah, and price came back and stopped us out or something like that. But it was still definitely a good opportunity. So 786 has been tapped. Also, the top side of the channel has been tapped here. If you don't know what the channel is, you can see it from here, even better. So here, this is the channel right here. Yeah, we were still fighting the good fight against our VWAP, which my VWAP comes from here. It comes from the low, so it comes from the bottom, and it shows where we may push back up into resistance, break resistance, or push back up into it. So, or break a average, because that's all a VWAP is. It's just like a point of control, basically. So average price, average range, average participation, average whatever. All right, so we got that. So that's basically all we've been doing here. on this chart right here. Of course, I minimized it to a line. So it just reads the area that we need to flip. And right now, according to the Binance chart, it's going to be 72,815.24. So that's what we need to flip on the Binance chart in order to be able to push higher. Next place of interest is going to be the golden pocket naturally. And then beyond the golden pocket, excuse me. I'll be looking for this mother bar. Excuse me. This mother bar liquidity to be taken there. I hope it's not too loud. Turn that down a little bit. If I had that up too loud, please forgive me. I don't know if the background music was working off of that too. But I turned the volume down a little bit. I could turn the music off if the music is a thing. I just have to have somebody to tell me that that's where the you know, it's overpowering or something like that. So yeah, here we still look fine on the weekly time frame. You can see the weekly time frame still looks fine. A little bit of a bear div right here between um, the top here, this candle here, and where price is currently at. So in its current form, we do have a little bit of a bear div. So we're rising faster. Momentum is rising faster than price action in this case. And you can also see down here also um, that there is a little bit of a possible bear deal. Nothing, it hasn't been confirmed or anything like that. So I mean, you would start out that way naturally. So we'll see what happens with that on the weekly time frame, and of course here on the daily time frame, we only pushed up into. So you can see where our high would have been right here. This same high right here. We only pushed up into that, so we don't have any bear dips over here, which is good. Let me open that up so we can all see that. So that's what we did over here. Um, and like I was saying in here, so I changed our fast signal to a weak signal because that's what we were dealing with as we were getting those pushes up. Is we were getting this was fast signal was showing exhaustion in here the same way it rose above. I call it a cloud cover. That's my name for it, a cloud cover. The same way it did a cloud cover over here before breaking below the red line here. But in this case right here, our implied signal is still soft. So if we continue down, I'd be looking for price action to bounce off of that red line there. It might even swoop below it a little bit like it did over here the first time and then the second time. Ever so slightly there too. But usually when it's down below it like that, and it looks something like you're seeing it now. It's usually just a place of support that can be seen from the oscillator, possible oscillation support that'll be coming in. So that signal remains soft, and the XL sits right here with it too. So again, nothing has changed. I did move this part right here up a little bit because it will move with time, right? It's not it's a it moves around. So if I do it like this right here, you can see this is going to be where that center point is on that indicator down below. So the center point here where we have our implied signal at is slightly below the center line there. So is this entry point right here, slightly below that. Can be modified just a little bit more to bring it down ever so slightly, but whatever happens in here, it looks like we just continue sideways price action, right? That's basically what I'm seeing right now for the daily time frame. Maybe another little dip into here and then a push back up. And when that happens, um, you'll probably hear. Because right now, I don't know that that's going to be successful. I'm just going to say that it won't be successful. The move down won't be successful, but you'll hear people say, something like it was a fake out, blah, 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 blah. It's not, it's consolidation. It's consolidation, and we were able to move through this value area high. So simple. Like it became very easy to push up and down through it. I don't think that anything's changed where price action is going to have a hard time coming back up and failing with it. So this isn't even the area. The value area high right now is not even the issue right now. It's not the issue. The problem is coming from up here. The problem is coming from some lows in here. So this is where the problem is coming from. It's coming from right in here. It's not really coming from it's not coming from the value area high. So we could say it's this low right here, and it's this high right here. So it's really coming from this. So if I take this and just let me see, let me put this on. Let's do this right here. Actually, let me just use this right here. So just use that. So we have that there, and then we're gonna have this here. Excuse me. And so you're going to see that this is where your issue is coming from. It's not your value area high. So it was at one point the value area high. You can see in here how it had moments with it, but price action is not really caring about this value area high. So it's a talking point because I know a lot of people will trade that way, where all of the emphasis is going to go on this value range. All of it's going to go on this, and that's not even it. It is support and resistance. It's where we have those pivots at. So this is where our problem is coming in right now, and the next problem is going to be right in here. I don't care how much um, of empty space is in here. Resistance is resistance. We would still have to get through that. So it probably won't be a fast blast up through there. Um, we're going to need some major momentum for that to take place. So that's our problem right now. Problem area one, simply right in here. Problem area two, simply right in here. Okay. Um, let me push out. All right. So we covered that here on the daily. And like I said, in here, like we could do this once we manage um if we manage as well. So it's a if we manage as well. And we know that this is an area that we were looking at prior, this high in here that we never, the price just never came down into it. But we could, do this golden pocket, or again, we could do this trend line right here. So if you weren't using those moving averages. You can also use EMAs if you want. Like if you like how I do my trading, which again, this is not EMAs, but I can show you how the EMAs can match up with it. Um, I can show you how the EMAs can match up with it. I'm gonna put that on. So just pardon the noise as I do this. Let me turn this off right here. So pardon the noise as I do make the attempt to show you. So I put this on a set of EMAs over here. I think I already changed the settings on it. So if you wanted your EMAs to match, usually I do 5 and 10 is what I usually do for my EMAs. But you're not going to do 5 and 10. So if you're using 5 and 10, you're going to be slightly off from where mines are. If you can see through that, you can see how mines are. You're going to be slightly off. The only one that's going to come close is going to be the 26, and there's a reason for that. And the reason is going to be because when you change it to a 9, and you change this to a 12, and I'm going to cover this too. And I said I was going to do a class on this, but when you change it to a 9 and you change it to a 12, and actually let me turn off my 7. Let me turn off my 7 and my, I don't want to turn off my 14. What am I thinking? I got something else on in here. What do I have on? Let me turn off that first one there so you can see it. So one is just not coming up for some reason. Um, I may not have my 60 on, but by using a 9, a 12, and a 28, those are your settings for Bollinger Band. So that brings you closer to what I have here. So I do wanna get into that. I know I'm not gonna be here long enough today. I probably hint around at a couple of things in here on that because 'cause I've seen a lot of tweets going out talking about, that cross up on the MACD, and yeah, I'm Imma set the record straight on that kinda stuff like that, because that's not how you do things. Number 1, that is not how you do it. So, right now, I just have on the 7, the 14, and the 28. Those are, some settings you may change your RSI to. So, um, so that's that. Let me move forward here. I mean, you can see that over here. No, you can see that over here, but it's here. I think I have it on, like, the 15-minute as well. Is that still loud? Hold on, let me check this music. Okay, I took care of that a little bit more. Um, so you can see this sort of triangular formation that's taking place right in here. And again, this is just where the golden pocket is going to be sitting at right here for something that we were looking at previously. This is it right here. So that's that. If we do flip into here, we would be looking for this high in here to hold us up. Um, we're back above the pivot of this low in here at the moment. We're back above that, and you can see how we're kind of resting off of that right now. So we're back above that, but you can also see like the bear divs in here, which is why you continue to see us kind of squeeze down a little bit more. So you got the bear divs in here as we're trying to round out at the lows there, trying to round out. I don't really see a clean count through here, so I'm not gonna get into that because I have to. It has to make sense to me, and I don't see it right now. And this is just a trend line that came from here through here. It's just this trend line right here that connecting those two lows right there. That's what we're resting on here on the 15-minute time frame. And actually, let me see if I drop, and this is the same thing as I was just showing on the 1 hour time frame, which is basically um, that golden pocket, that that setup that we were trying to get a while back, but we kept squeezing higher and higher, so we never got it, which is good. It's just good too. Let me see what VWAP is going to look like in this case. It's probably that one's probably above it, and let me see what this one looks like in this case. Okay, so yeah, that one's well above it. I try one more of these VWAPs in here from this momentum that we have going on. I have this one. Let me give this one a shot. And our lower one, just to see how we're comparing to that. Okay, so this one is down in the golden pocket. So I think I'm gonna go with that. I think this is exactly how we had it before, was just like this when we were looking for that push back down into here, or that retracement or correction, whatever, back down into this area right here. All right, so that's what we have right now. Further, any lower down into here, we're going to be looking for the golden pocket tap, and then you can also do that VWAP along with that. But again, like I said, on the daily, this is value area high is nothing anymore. It's really not. It's doing nothing. It's really doing nothing. You could say 1, 2, 3 times in here, it actually did do something, but we could move through that easily. It's just really getting through these pivots in here. That's gonna be the major in here for us. And of course, our descending channel that we have in here, which price action typically breaks to the upside in that sort of situation right there. Here on our USDT dominance, you can see that we did catch our support level in here on our USDT dominance in here, and we're getting closer and closer to the lower trend line for our ascending broadening formation, which again, this is a bearish formation. So if USDT dominance does break this, and I will be looking, we of course we will be looking for the inverse to happen with Bitcoin, which would mean a pump out of Bitcoin. So I know that we've looked at a couple of things a few times through here with this pattern set up, um, and we just haven't got it to play out. I had to switch up my bias and say, okay, well, maybe we can come in here and do like some sort of a double top, or maybe we get back in here to this trend line right here, blah, 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 blah. That didn't happen. That's great. Because at the end of the day, it's still what I say, well, what I'm thinking about it, which is this is still a bearish formation right here. It's a ascending broadening formation, still a bearish formation. Maybe we come in and tap it, and then we get a bounce. I'm looking for us to break down below it. I'm really caught off guard by the fact that I would have thought that it would have been sitting on here since Bitcoin price is sitting at the top side of that channel, but that didn't happen. So I just can't continue to wait for us to come back down here into it and see what we get. So right now, that's that. I can move this. This was a swing fail. I can move this and make it look more so something like that. And then let's just do this like this. I know it has that little wick sticking out, but I'm not going to worry about that too much. Uh, it's not that big of a deal to me. VIX is pushing up a little bit in here, and I can also see in here, you can see how we're starting to break here on S&P. So we did, I think I turned that line off because I could just simply use like the 80 for when we break back into 80. So that was simple enough for me, but really it has been, my focus has been this trend line too, just to make sure it actually breaks. Because we did push through, we did push back up. And oh, this is Amazon. I'm so sorry. This is Amazon. Well, I guess you can see what's happening with Amazon then. Amazon was at resistance at one point. It broke up above it, and blah, blah, blah. I need to put this on S&P, so let me put this on SPY. Here we go, SPY. Let's see where SPY is at. Okay, so SPY did get the, because we was watching this right here. The thing was, if SPY was going to continue up because it was maintaining the support here from its all-time high momentum line, which is the one that you're seeing right here. So this is the one from the all-time high. This is the all-time high right here. It was maintaining support on it, and I can see that we have fallen back below it. So that's a good thing. I do still have this down here. So I just want to make sure that we keep it going, and you can see how it's holding VWAP there as well for any retracement back down here on SPY. So SPY, SPY, SPY. I spy with my little eye. Unless SPY comes down as fast as it went up, it's just going to be some bullish divergence, and we're going to look for this to continue higher. So you just probably be getting a retracement in here. Can't just draw a fib from that low to the high and look for a golden pocket back test, and that's going to be it, as opposed to really paying attention to this trend line right here, unless it drops down and starts to consolidate a little bit just to correct some slow down the pace of the momentum in here, and then get a second drop. That could be the case in here for SPY. But right now, it doesn't look bearish, in my opinion. Even though I know it got high off the hog in here, it does not look bearish, in my opinion. It looks like whatever happens in here would probably be a higher low, and then SPY would try to pop back up here and continue. That's what I say. Oil, oh my gosh, like oil didn't do It did not get the breakdown I was looking for in here. I did only leave it to come back to this 92.05, but I guess that's not going to happen either because that was the theory that it would do like a flat. Um, but yeah, that's not even happening. Let's see. Yeah, because the idea was that it would probably do something like a flat back down here around the 92. That did that, but ugh, it's holding. It's holding ground. Yeah, pop back up there. So we know that at least we know it's back at some sort of resistance. We could still do a head and shoulder formation. We still could do a head and shoulder formation, and that measured move would still put price down here towards this white line in here, possibly below it. Definitely get that gap filled right there. Oh, speaking of gap fills, I do need to check out CME. Also, see where we're at on CME. I'm only looking for continuation up on Bitcoin, honestly. So that's that's where I stand with Bitcoin. I do think that this is just going to be a retracement. It's going to look worse on your lower time frames than it is on your daily time frame. But I feel like this is just the correction we need after all of this squeezing in here. All of this liquidity grabs that we got through here. That's what I feel like with that. Oh, let me go ahead and address this situation while I got you here. I'm gonna put this on. Let me find. I think I was using like 8, something like that. Yeah. Let me turn this off so I can expand in here. Yeah, so I have this set up with this is going to be your 12 EMA in orange. Let me show you how you don't need it. I'm going to turn this off. Oh, I connected that. Let me do this. Change that to that. Okay. So the white line is going to be your 12 EMA. The blue line is going to be your 26 EMA. And down in here, I know I have MACD. Let me change this back. Let me just reset. No, I don't want to reset settings because if I do that, let me turn off the signal line because you don't need that. And actually, let me drop mine, my personal one. I'll drop that one off. I think on this one right here. Let me change this back to your columns right here. And I have them separate. I mean, two different ones in here just so I can explain this to you. All right, so you all know I explained why I have a 9 EMA. I mean a 12 EMA and a 26 EMA because that's the difference. 12 and 9 is the difference for the signal for the MACD, right? And basically, you don't need if you're looking for just where signal crosses happen on a MACD, you don't need MACD. Here are your signal crosses right here. This is MACD getting a signal cross. When the they call it a histogram, even though it's columns. When your histogram comes above 0, that's a positive cross on, or that's a signal cross on the MACD. MACD and MACD signal line just cross. When you're dropping below the 0, that's another signal cross, MACD and MACD signal line. So if you're just looking at that, let me put this on because people are looking at this on a weekly time frame. Put it on a weekly. People are looking at this and they're seeing this signal cross right here, and they're like, that's a reversal signal. I went back and I studied like how many times that signal actually plays out, which it really doesn't. If I just use MACD the way that I understand using MACD, you're not going to rely on that signal line, not by itself. It's no bueno by itself. So you don't need the lines in here that simply compress price action. You don't need this in here. It simply compresses the columns in here. You can just take that away. So you can see how you do have the signal crossing here on the MACD. But like I said, if that's what you're relying on, you can just turn that line off and just use these columns in here by itself. Is once you turn green, that's where you have a signal cross. Once you turn red, that's where you have a signal cross. Once you turn green, a signal cross to the upside, a signal cross to the downside, signal cross to the upside, signal cross to the downside. That's what that is. And you can see what the results have been for that happening. It's corrective. Most of the time when you see a signal cross on the MACD, it's only corrective. It is not reversal. That's why every time you got a bearish signal cross between the MACD and the MACD signal, you didn't get a reversal here. You got a correction. What makes the difference when you're working with MACD is where MACD is in relation to the zero line, not in relation to the signal line. You don't want to use MACD just simply using the signal line. That is not the end all be all. You can just use the columns if that's what you want. If that's what you're looking at, you can just use the columns and be done with it. So again, MACD signal line. There it is. There it is. There it is. And you can go back as much as you want. There it is. If that's all you wanted to look at, just forget about Just forget about the line. Just use this right here. But that doesn't guarantee that you're going to get a reversal. It's corrective at best. MACD right now is sitting all the way down here around a negative 8,000. A negative 8,000. What's going to make this important is when it's above here. MACD needs to be above here. It needs to be above zero. It's corrective as long as it's below zero. It's not a reversal. It's corrective. Which is why in here, which is a great way of using MACD, because MACD is a lagging indicator unless you know how to fix it so it's not lagging, or you know how to read it other than looking at a cross. That's why in here, every time you got a negative cross, it wasn't a reversal signal, because where is MACD? MACD is above the zero line doing all of that. It's doing all of that above the zero line, which means it's simply continuation. So another way you can see when the MACD actually crosses below to know if it's going to make sense for the reversal, to know if it's going to make sense, is by simply putting on, above the zero line. The other way you'll know that MACD is above or below the zero line is by using the 12 EMA and the 26 EMA. Where you see the 12 cross below the 26, that means MACD is below the zero line. When you see 12 cross above the MACD, you're going to know, cross above 26, that's going to tell you that the MACD is above the zero line. That's where you get your runners at. So you only see that in here. Let's go MACD above zero line. This is where this is where the 12 crossed above the 26. Right here. 12 crossed above the 26. This is how you catch the big move. The big move happens like this. 12 crosses above 26, and you get this strong push up. And then you'll have moments in here where MACD is going to cross its signal line, but you see this big gap. You see this space. You see this right here. MACD is above that zero, so none of that is going to matter. That's going to be corrective. You don't see it cross. You don't see the 12 cross below the 26. You don't see any of that. Bam, you got a new entry to continue higher. You have a new entry to continue higher. Same thing over here. You got this dip right here. 12 stays above 26, bam, you got a new continuation entry right here. Buy the dip. This is a buy the dipper right here. Now, at some point, it's not going to work anymore. Here you see MACD. You see the 12 cross below the 26. That simply means MACD is now trading below the zero line. And when MACD is below the zero line, that's where your bias needs to change. You see right here, the 12 and the 26, they don't look like they're about to cross, right? That means MACD, again, MACD is sitting down around a negative 8,000 or so. So right now we can come up, we can take this out, we can still roll to the downside. I know that. We'll see how that works out. We can consolidate in here for a while too. We don't know what market makers are going to do to make a call on it, but right now this isn't the signal. That MACD cross, this right here, this green bar of MACD crossing the signal line, that is not your signal. That's not your signal. Don't do that. I saw somebody else doing it. They don't usually use MACD. And so, understandably, a lot of people aren't taught the correct way of using MACD. So you have this cross up right here on MAC that gave us that nice rally right there. This is all you on the weekly time frame. You can just go with this and make money. You don't have to be the fastest horse out of the stable. You can go with this and make money. This is where MACD crosses back up the zero line right here. How do we know that? We have a cross between the 12 and the 26. And you can look at that and look at how price action looks with that to be able to make a more informed decision. Again, like you can see it in real time on the chart. To be like, how successful is this really going to be? Because right here, you can see how it crossed down and it wasn't successful. And I'm going to explain to you that too in a second, because you need to know this too. So this is just a quick class right here on MACD. You need to know why this failed. And it's another puzzle to the MACD, another puzzle to the MACD. So you had that one. You had another cross right here, MACD coming above the zero line right here. And then you get this nice pump up right here. And again, I'm gonna explain this one over here to you. And in here as well. So those little dots and stuff that you see on my chart, it just shows me agreement. It shows agreement between MACD and the histogram. They have to agree with each other. That's another part of the puzzle. They have to agree with each other for it to matter. And if they don't agree with each other, then they're both doing their own thing. Only if the MACD is leading, but I'm about to get into that. Another MACD cross up above the zero line. And let me drop this so you can see MACD above the zero line. That's MACD above the zero line. Again, 12 crosses above 26 means MACD is above the zero line. I don't have it on for the ones where it crossed down. I could turn those lines on. But right now, I just wanted you to see how you can just win beautiful trades through here with that happening on the weekly time frame. You don't have that right now, so you're not going to be winning too much. But I mean, you can, you don't have to rely on something like this. But that's 12 crossing above 26 on the weekly time frame. MACD, again, that just means that MACD crossed above the zero line. That's what that means. Here again, it crossed above the zero line. So I'm gonna explain to you why sometimes, like, it's only 2 failed trades doing that. 2 trades, you would have failed 2 trades doing this setup, and you would have known you were wrong quick. You would have known that you were wrong quick. And it doesn't compare to where it did cross and how much you won when it did cross. It doesn't even compare. Doesn't even compare. The money you're going to make looking for that to happen, looking for that 12 to cross up that 26. The money you're going to make on that is not even going to compare to if you get a false one, not even a false one, a failed attempt. So how can you identify where it might fail at? This is how you can identify that. I'm going to turn that off. I'll turn this one back on, and I'm going to change this to a line. All right, and I'm going to turn on MACD. Okay, I still have that on. So MACD above zero line, I still have that on. All right, before I tell you that, just gonna run through it real quick. I'm gonna see if anything catches your eye. If anything in here catches your eye when that happens. It may not. That was a winner, of course. This was a failed one right here. If you were waiting on the candle to close to enter, you wouldn't have got far. So I know that it reads a failed attempt there. And like I said, there weren't many times where you would have did that and not been successful. So what's important, the other piece to MACD is where MACD is in relationship to your histogram. Now this was a correction move right here, and then afterwards it was over because it did actually fall below zero momentarily. It fell below zero momentarily, and the one where it breaks below the zero line, that failed, and you saw you got a reversal there, and it's because MACD was above. It's above the columns. MACD not only needs to be above and below the zero line, it also needs to be above and below the histogram. Successful rallies take place when MACD crosses, not just crosses the signal line, but crosses the zero and crosses above the columns, the histogram, crosses above the histogram. That's where you have successful rallies. Signal line cross, check. Zero line cross, check. Above histogram, check. That's where you have a good move at. See this one right here. Now here it did it, but it failed quickly. It did the zero line, check. It did the signal line cross, check. But then you can see once it got above the delta, it fell over. It fell over. But again, right here, signal line cross, we can check that off. Zero line cross, we can check that off. Above histogram, check. Rally. And then the rest of those are going to be corrections. That's a correction right here. MACD came down, stayed above the histogram. That's a correction. It broke below zero, but it stayed above histogram. Correction. Continuation. Check, check, check. Rally here above histogram. Correction. Above histogram. Correction. And above zero. Above histogram. At some point, it's going to fail. Below zero. Below histogram. Continuation down. We're nowhere close to anything like that happening right now. So just know that right now, all you have is a signal line cross and a MACD that's all the way down here at 8,000. It has to be up here and above this right here for right now for it to even start to imitate a reversal. So don't worry about that signal cross on MACD. Please don't. Please don't worry about that signal cross on MACD. But like I said, 6 trades, it would have fired off 6 trades in here. You would have lost 2. You can even count 3 if you want to, but you would have lost 2 and you would have won the other ones. And it wasn't even fair how much you won. Wasn't even fair how much you won. This might be a better interpretation. So this is MACD below 0. Well, not really. I can move on past that. Let me see. Divergence is really a good way. So if you're not doing those 3 checkpoints, divergence is going to be your next best thing to successful setups using MACD if you rely on MACD. And again, I implore you, please turn on the 12 and 26. You can see where we're capping out at. You can see we pushed into 12, rejection, 12, rejection, 12 and 26. Otherwise, you do divergence. And when you have divergence, you're going to look for an SFP. You start looking for SFPs when you can see divergence. And I do divergence on the histogram. I do not do the divergence on the MACD. I do the divergence on the histogram. And you'll find that Bitcoin's weekly time frame puts in a lot of divergence at the lows. So you can see how we have this big bullish divergence right here on our histogram down here at the bottom. So if it's coming into an area where you're either going to look for an SFP or you're going to look for support to be hit. In this case, we know that Bitcoin price action is sitting on support. You want to see it do one of those 2 things before playing the divergence on it. But we do have this big divergence, bullish divvy down here on the histogram portion of the MACD. And we're already putting in a little bit of bearishness in here already as we're hitting into the resistance here at the 12. All right. But you want to look for support, and we already know where our support is coming from in here right now. We have support there. And secondly, here. So if it's coming down and you're not seeing the SFP, then you're looking for the divergence to play out once you land into support, which you can see again, like I said, support, prior high here and prior high here, both acting as support. For the bull div. And the same thing through here. You're either looking for support to be hit to play out the bullish divergence, or you're looking for a swing failure to take place. When you do see the divergence, just wait on those 2 things to happen, and you're going to be successful if MACD is something that you want to trade. For me, what you were seeing here on my chart, this noise, two things need to happen. And forget about the green is just letting me know I'm above the 0 line with the MACD. I'm going to put this indicator out there for you guys. But the green just lets me know I'm above the 0 line. You can see how it turns gray as we get the cross below, the cross between the 12 and the 26 in here. So if I wanted to use MACD, then I could use that for that purpose. But what I'm paying attention to is the dots. Where you see the dot set, that means the histogram and the MACD are agreeing with each other. That means they're both rising at the same time, or they're both falling at the same time. That's it. And you can do that too, just by simply using like my personal MACD. I don't do I do color coding on my personal MACD, so I can see where the MACD is actually turning down or whatever. But if I didn't want to use that, then I can just focus on what's on my chart in here. So when those red dots are showing up, that means that both MACD, and that's how a signal cross won't work too. Also, is if you see there's no agreement. Right now, there is agreement. We've had agreement on both the MACD and the histogram. They're both rising. So you got green dots through here. So they're both rising right now. But it's red again because MACD is far from crossing above the zero line. But you can see that nice, again, green continuation in here. Just places where it doesn't, you'll get this right here. So MACD declining, histogram declining. That's bearish. Those are times where I think when I looked at it, if you got like a signal cross or something like that after amazing rally, then yeah, it mattered. But yeah, they're both declining. So you get those red dots, and then eventually, MACD crosses below zero, or something happens. One is still moving, the other one isn't, and then it continues out. So that's just the last part is MACD and Delta agreeing. Also, that's like that. That's very, very, very important. Are they agreeing? Because if they're not agreeing, then what do you got? They have to agree. MACD and Delta are both rising. Sometimes Delta will turn down. If Delta turns down and MACD keeps rising, then MACD, as long as MACD is above zero, that's what you're going to go with. When they both turn down, that's bearish. This is why you don't realize how lagging. This is why a lot of people call it a lagging signal, and it's not. It doesn't. It lags. Yes, all indicators lag a little bit, but you have to know how to read them too. If you're not getting proper information on how to read them, then it's gonna lag even more. But when they both turn down, when they both turn down, price is going down, and then you just have to do the rest of the work. Is this a buy the dip situation, or is this a continuation situation? But you'll get it. You'll get it. I'll do this again where I really, really get into it, but you will start to understand. Indicators are not as simple as people make the videos and they like signal cross, buy, signal cross, sell. No, no. I promise you'll get wrecked if you do that. I'm just gonna put this on my main three. See where we at. A lot of noise here on the 15 minutes, so I just need to zoom out here on the 1 hour. I can turn this off. I don't have a squeeze anywhere in here. We were squeezing pretty bad on the 4 hour time frame though. We had started squeezing through here, and when it's red, get that red squeeze, then you're looking for prices to drop to the downside. And I think that we did the same thing over here on this one too, up here. Yeah, we put that squeeze in, but this right here, them wickety wicks. Jeez, those wickety wicks. Turn that noise off. All right. So we're still coasting, still correcting through here. I don't see a bear div again, but yeah, we're not gonna even worry about the bullish divergence really playing out down through here right now because bears are in control right now. So um, you can't just wait. You can wait. I don't really care to do the trend line break thing. Like I said, 786. I mean 618 golden pocket tap in here. We'll be looking for price action to hold that. I do have MACD in here as well. Just I'm really more RSI and commodity channel index CCI. Really more into those two. But you can see where we're at right now. Just chopping and continuing down right now. But again, even here off of this 1 hour time frame, you can see where MACD above the histogram, above delta. So going forward, when I say delta, you know I'm talking about what people call just the histogram. But above delta, it's above delta, correction, above delta, correction, above delta, correction, declining. Though we can see the bear dips in here. At some point, you know that's gonna pop, and then it's gonna break down. Below zero, below delta, below zero, below signal line, all three. And then, of course, you can, again, just use, I'm using a 107. See, if I was doing EMAs, that would have been the cross below zero right there. Price action below the 26. If you was doing an EMA, this would be your 26 EMA, and you would see price action trading below your 26 EMA. I didn't mention that earlier, but yeah, you see your price action trading below the 26 EMA. Over here, you never see price action trading below the 26 EMA throughout all of these corrections right here. So correction, correction, correction above delta, above zero line, above 26 right here. You never see it trading below the 26. So if you do drop 26, you want to see it reclaim above 26, or you want to see that across back up. If you want to be faster, then you're just going to do trading below 20, trading above and below 26, reclaim or something like that. Same thing over here on the 4 hour time frame on here. Just treat that like continuation signals right there. If it makes sense for you to treat it like a continuation signal. Right now, let me fix this too. I'm gonna turn off 10, I'm gonna turn off 7, I'm gonna turn off 60. Right now you can see what the difference would be between, like right now, MACD, if I was using that, you can see this is the 26 right here. Price is still trading above this. It's holding that as support. You can see all through here. It held it up as support in here. You can see where it did cross above it right here, and then it continued back down again right here. So you can just do, and you don't even have to have this one on if you don't want to. You don't have to have that one on. You just look at this like this is my 26. Actually, let me just put a 26 on. So that's a 26 EMA. That's actually an EMA. So your 26 EMA here. Oh, speaking of which, let me do share this with you too. So if you're on your weekly time frame with your MACD, if you are looking at this, just so you can talk to people in your circle or channels that you watch that are encouraging you on that little cross on that signal down there. Something else to look for, and you're going to see it in here too. But let me turn that off. Let me turn this one actually on, and let me turn on these two. So MACD, MACD exhaustion usually takes place around a 200 and a 400, especially when you see divergence as well. It usually takes place around a 200 and 400. And again, I opt out of using, I like to change it to a line so I can see what's happening a lot better. I see better when I have it as a line personally. Divergence, I can see better like this, but yeah, you're usually going to find exhaustion on a MACD around a 400. I mean, a 200 and a 400. That's usually where you're going to find exhaustion at. So we push forward, you're going to see that's where you're usually going to find your exhaustion at. This is where we try to hold that first support level at on back in 2022. That's what we tried to hold that first support level at, and then you can see how you got the bull dips down here as well, but we didn't, like I said, you would look for support or you would look for an SFP in this case. But back here we had this one for sure. And then I would have done it like this so I could see why. I understand why people were looking for prices to go lower. That looks like that's a little bit higher. I understand why people were looking for prices to go lower. Um, when they were calling for 11, because you would have been looking at this pivot over here naturally. That's just something that you would have done. I think that we, for the most part, let's see, we turn this one off. Yeah, so you didn't have anything in here that would have gave you some sort of confirmation. You would have done the SFP though, likely likely going for an SFP. So SFP off of that low right there, identifying that, you know, momentum isn't moving as fast to the downside, but then support. And like I said, 200 and 400 is usually where you find exhaustion at for the MACD on these higher time frames. On your lower time frames, sometimes you will break below both of those. But on your higher time frame, it's usually going to be somewhere around a 2 and a 4. This is a bit stamp, yeah, bit stamp. Yeah, Bitstamp 400 doesn't go out that far though, so unfortunately, I can't show you any deeper retracements on it, but it's usually going to be somewhere around a 2 and a 4. And right now, you can see how we're at the 2 right now with the bullish divergence, and that's why we're staying here and we're getting this bounce. And eventually, if we do roll over, I would be looking for it to come down here into the 4. But not shabby, not too shabby. And you can see how we were flirting with the 12 back here too. Around we were closer to it here once we tapped into the 400. Of course, we started to tap into the 12. And price does what? Price starts trading back above 26, and then eventually you get the cross between the 12 and 26, and then you get the massive rally. But yeah, you'll find some exhaustion. Around, that's why we're finding exhaustion where we're at too. It looks exactly like that moment in time right here, doesn't it? it does. It looks just like this moment in time where we got that little wick down right there at our 200, and then we went sideways for a little while. But this didn't. I mean, this is lasting a lot longer over here. And in this case, we didn't push back into the 12 either, um, which we've already tapped it a few times through here. Tapped it there, there, and another rejection off of it right there. Anyway, I don't think Bitcoin is going to do too much until market opens. Let me get that out of here. It's not going to do too much until market opens. I would continue to look for that situation. Again, where is this one coming from? I don't know. I never moved this line over here, so I apologize. And if I was moving it, I probably would have, I don't know, set it down here for no reason. 'Cause I don't have anything really good to go off of right there. Turn this. Yeah, they're probably just going to consolidate it until market opens. And with that said, I am on vacation. I did just want to pop my little head in here. I will see you guys again tomorrow morning. But again, it will be a shorter stream, just like today. Um, this looks like it was just reject again through here. But one last thing I would tell you, if you're using an indicator, find out what gives your indicators the signals. You want to know that. By knowing that, then you know if you use ribbons too, you know what ribbons to use. It makes a difference. It really, really does. You just right click, source code. It tells you it uses a 12, 26, and it's the difference between that is the 9 for the signal. It tells you right here is using EMAs. That's what it's defaulted as, is the EMA. Once you know that, you're a step above other people who use indicators. You're a step above. Find out what's in the code. And this is why a lot of things look alike too with indicators. This reason right here, the 1226, and it makes a difference to 9. You could do the 9. It really won't make a difference. It's a 12 and a 26, really. So 12, 12 and 26. That difference is 9. So 12 and 26 are the ones that you need to use if you're using the MACD. 1226 EMA. And that's how you get that beautiful 12.6 EMA information, right? Because that's what you end up plotting on your chart, 12 and 26 EMA. That's what MACD is, 12 and 26 EMA. If you were using something else, let's find something else that people use. What do people use? Let's say CC. Let's say CCI. Just the commodity channel index is what I want to go to. So just the commodity channel index, which is this right here. Source code. This is using a 20. It's using an SMA. So we're going to put on a 20 SMA. I don't have one right there. Let me go SMA. Smooth and moving average. I'm going to change this to a 20. I'm going to take away this. Take that away. What do you notice? By putting this on a 20 SMA, you can tell where your center line is. Because a lot of people will only trade the center line. You can tell where your center line is for your CC by doing that. And see, CC is using hollow close 3. I think this is set to change that. Hollow close 3. So you can see through here. It's above the 0 right here. It's above the 20 SMA right here as well. So there you go. You can pretty much know when you're coming into your 0 by doing that. So you can see right here. You can see right here. So you can pretty much know where you're at in relation to the indicator if you're using the CC. Just whatever you're using, you can tell where you're at in relation to it that way. Right here, you can see how you started to chop your 20 right through here. So that just helps you be able to see a little bit better with your indicator, like what you can expect on your move. Very, very useful. You can see you're above it right here. You got that little peak above, and then you lost it right here. So this is even faster than Bollinger, depending on how you use it. Right here, you can see the break below right here. This is showing that it's still declining below 0. So we'll short the crap out of that right there, because you can see it's showing that it's still declining below that 0. Same thing over here. It break below the 0 CCI, below that 20 right there. And then you can see how it was still declining below it right there, at least until it came back above it and start trading back above it. But you can see that kind of stuff right there. So you could determine, like, if my CCI is sitting here, it's going to be hard to put a number on that other than to use this right here. And it's nowhere near it right now. So if you were somebody who were looking to short, that could like be a target for your short right there. And then just see what you're around. You got these highs over here, these lows right here that could act as some sort of a barrier to price action. But usually price action oscillators and return to their mean. So this one right here, maybe it gets back there, maybe it doesn't, but oscillators tend to return to the mean. So when you hear me talking about mean reversion, oscillators tend to return to their mean. They move far away from it, and then you can see how far away it is from the mean by plotting that EMA or SMA or whatever it is that oscillator uses. You can see how far price is away from it in real time. and not just look down here and see an oscillator and waiting for a signal cross on the oscillator. Like you can see in real time, like how far away you are from it, what the potential outcomes could be to make your planning. You can see the bullish divergence down here off of the CCI as well, as it is attempting to climb closer towards, but it's all the way up here. It has to get up to 85, 327 to even do a mean reversion. Has to do all of that just to get that mean reversion. Because it could fail. Like this right here didn't make the mean reversion right here either. Oscillator turned back down before managing to get to this right here. So for some reason back then I would have been looking for a short, and I'd have been like, let me see if I can't plot it directly. Yeah. I would have been looking for a short. My entry would have been right there wherever this 20 was at. It would have been right there. And I likely would have looked at this low right here, and I would have did this low right here as well because it's here. Yeah, I don't want to go past my mean. So that one and this one would have been what I would have been looking at. And unfortunately, you can see that we stayed underneath here. So if I drop this to a line chart, that ended up being where rejection was from, and we didn't manage to come into here. But if you're looking for a rejection point, if price action manages to get back up there, I mean, you'll have this one, and you'll have this one here to look at if it's coming up there. And then, like I said, for me, I'll be looking for a mean reversion. I'm already in a short. Like if you were playing the higher time frame, this is just higher time frame stuff. Then your stop doesn't have to go up that. It doesn't even have to go up this high, because if we're coming back above our mean, we know we're wrong. We want to see a mean rejection, something like that. So you don't have to have a huge stop loss in here either. You can play it just like that. It's far off from it right now. I look for it to come up and fail. A failure is really good. If you can catch a failure, it's really good. Just like if you can catch a failed breakdown and come back up, that's a long all day long, baby. Fail, 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 come back up. Kidding me? Fail and break back up. It's good to look at it like that, especially when, like I said, when you get a failed breakdown, mean reversion. Phew. Yeah. So find out what your indicator uses. You step above if you can do that again. All right, so I'm gonna get out of here. I love and appreciate you. Thank you for stopping by to hang out with crypto down to crypto TA, the indicator annihilator. That's what I am, the indicator annihilator. Yeah, you're definitely holding us right now. So I did take a long. Let me just say that too. I did take that long because we were sitting in here. Let me delete this. I'm using this set right here, but I did take our long because we were holding right here. So if for some reason I have to if I get stopped out, or see a reason to close it out earlier. Right now, I'm gonna hold it. Uh, until it does fail. If it fails, then I'll look to re-enter down here. It just depends on what things look like. But right now we are holding. We are holding right now. So I did take a long. And I do still have the short open as well for Bitcoin. All right, and I'll see you in the morning, same time. I'm just on vacation, so I hope the sound wasn't too bad. I really do hope the sound wasn't too bad. Love and appreciate you, and I'm out.